The banking collapse that never stops. We have been talking about this for quite some time. Hello, everyone. Welcome back to the channel. My name is Nick, and there is a growing problem happening right now around global finance. And that problem is banks. We've been addressing it for quite some time. We've been talking about it for quite some time as well. And I'm pretty sure at this current moment in time, everyone is aware of just how big of a problem liquidity is becoming. Back in 2022, specifically November of 2022, once we saw the collapse of FTX and everyone was focused on that, what we were really focused on was liquidity around the financial system. And I said liquidity crisis incoming. And it was in response to what Gold Telegraph put out back in November, which was what the Federal Reserve was telling us. We have the Federal Reserve Bank of New York says bank liquidity may be tighter than thought with policy implications. You can't make this up. Now, what's funny about this is as we really look at what the Fed was telling us during November, and once we saw the collapse of Silicon Valley Bank and even Signature Bank, which, by the way, this did not happen on March 15th. It actually happened on the Friday previously, which we will talk about that, and we'll address why that is very important to know. But after we saw this collapse, which happened in March, so months after the Fed was telling us, like, hey, liquidity may be tighter than we thought, they put out a full report, and so did Janet Yellen, talking about how the U.S. banking system is as strong as it always was, and it's even stronger now. But how is that the case after we saw banks collapse? How is that the case when back in November, the Fed was telling us, and we're talking about November of 2022, right, just months before this major banking collapse, they told us that liquidity may be tighter than thought. Something is not adding up here, right? The alt season time bomb is ticking, and now is the best time to go and get your free access to 30 secret crypto gems that I personally have researched completely for you so that you can save a ton of time and make a ton of money. The link down in the description below takes you guys to this page where you can claim your free access instantly. Right now, free of charge. It's completely free. So what are you doing? What are you waiting for? Go and click the link down in the description below, as well as in the comments below, to get access now. And that's exactly why I also said that retail is being told lies right now, that their bank accounts are safe, depositories will be covered, and all is sunny in the world of finance. The truth is that the Fed is at a very scary point in time where either the decision to pause or raise rates will ultimately lead to systemic chaos. Now, I also quoted that and I said that we will now face the repercussions of the Fed's 25 BPS hike. Banking liquidity is being constricted. This crisis is far from over and a much larger storm is brewing. Now, as you guys do know, back in April, we saw the collapse of Philadelphia Bank, Republic First. This was a major collapse because what it showed us is that, yeah, we are not out of the woods. This is going to continue to be a thing. And, you know, the one thing that we really kind of look at is what happened during that time around risk on assets, specifically Bitcoin, right? Because everyone is looking at what Bitcoin is doing, and we're focused on that. And if you go back to the original collapse, which was Silicon Valley and also Signature Bank, this happened on the Friday previous to when this article got put out. So this was actually on, and we have it on the chart, March 10th. And as you guys do see, that marked the bottom on Bitcoin. This was Friday, March 10th. And from there, Bitcoin never saw sub 20K again. And even this announcement of Republic First, this happened on a Friday as well, happened on April 26th. Now, it took a few days for Bitcoin to find its bottom, which was at about roughly like 56.5K or so. And from there, we just kind of pumped. And we're still kind of waiting for a much larger expansion here. But regardless, these bank collapses mark the bottom, or even tell us that we're close to the bottom at least. And Now we got this full report, which was breaking news. The FDIC just reported that 63 banks are on the verge of an all-out collapse. Prepare yourselves. We have unrealized losses on available for sale and held to maturity securities soared by 39 billion to 517 billion in the first quarter. The surge was driven by higher unrealized losses on residential mortgage-backed securities, a result of rising mortgage rates in the first quarter. This marks the 9th consecutive quarter of unusually high unrealized losses since the Federal Reserve started hiking interest rates in the first quarter of 2022, the FDIC reported. And this is exactly why I brought back up 2022. I brought back up everything that happened since then, what the Fed was trying to tell us, what they weren't telling us. And now here we are, where we have major banks on the verge of an all-out collapse. If you guys do remember, I think it might have been around April, there was a report that came out where it said 300 banks. They found that 300 banks were actually at risk, and it was because of commercial real estate loans. Now we know from the FDIC is actually reporting on this, that 63 banks are on the verge of an all-out collapse. So is it 63 or is it 300? It doesn't matter, right? All we need to know here is that banks themselves are on the verge of a collapse. And it's all because of what's happening around our current financial system, where we have these massive interest rates. We have inflation brewing at massive rates. We have liquidity constricted. What does this tell us? Well, it tells us that liquidity needs to improve. How does that happen? Well, we start seeing the printer press kicking back up. And we know that this is going to be the case because we have to prop the markets up because we are still in election year. But this is us not getting out of the woods. In fact, it's us getting even deeper into the woods. And what happens next? Well, guess what? This is leading us to something much larger than 2008. Now, I put out a post regarding this where I quoted a very similar post. It's basically the same thing, right? And I said, history doesn't repeat, it rhymes. What's happening is going to make 2008 look small, because it will, right? This is a much larger problem. Even if we go back to 2023, these two bank collapses were much larger than 2008 combined. All of the banks that collapsed back in 2008, these two made up for. So think about how much of a bigger problem this really is when we put it into perspective like that. And I said that back in March of last year when banks first started to collapse, and I repeated it over and over again into this year too. The banking crisis is only just beginning, because I did say that this was just the beginning. Even over here, I said, like, this is not, like, this is only going to continue to really kind of brew and brew and brew, and it's not over. We are far from the end point. And even now, today, we still are. And I said that the banking crisis is just only beginning. This will continue to snowball into a much larger issue, but that's the plan. We are witnessing the consolidation of all major banks so that the big banks like JP Morgan, Citi, Bank of America, etc. can eat their lunch. This is also forging the path to the full systemic reset, which I've outlined on many occasions. And yes, this is exactly where we're headed. Now, what does this mean short-term, mid-term, and even long-term, especially for crypto assets, right? Because that's what we're talking about here. How does this affect our investments? How does this affect the money that we have in these markets? Well, let's talk about that real quick. So as we look at Google Trends, and I have about roughly 5 pages open here. We have Bitcoin, cryptocurrencies, cryptocurrencies, and altcoins. If you guys notice on every single one of these charts, they're basically flat or dead. Even when we look at Bitcoin, right, we had that nice spike back in March, which did mark the top for Bitcoin, or at least I should say the local top. Don't get too scared, guys, right? So this was like the local top for Bitcoin, and that's when we started to see interest dying off. So, and by the way, the reason why interest is dying off is because, I mean, look at what ended up happening during this time. We're just kind of chopping here, waiting for something to happen where we have a move to the upside. And I do believe that the next move will be to the upside in the short term, we might have a little bit more of a deeper pullback back down to like 65K, maybe 67K. It doesn't really matter, right? We're still looking at up, right? But regardless, that's why interest is so dead around all of these the search terms. And what this is telling us is that like we're not in euphoria yet. We're not at that point in time where alt season is here. We're not, going parabolic. You don't have your friends reaching out to you saying like, hey, what crypto should I buy? We're not there yet, but we will get there. The reason why I bring these trends up is because what is going to be the catalyst that pushes us to euphoria? What's going to be the thing that really kind of brings the retail crowd back? Is it going to be, just Bitcoin breaking out again? Is it going to be crypto going crazy while mainstream media really kind of pushes the narrative? Or is it going to be something that is going to bring in focus because of uncertainty and doubt within the fiat-based system? When we go back over here to the Bitcoin chart, right? And specifically, let's go back to the monthly. And if we go back here to March of 2020, in terms of uncertainty, this was a very uncertain time in the market. People flocked to the US dollar. They hold on to fiat currencies at a time like this because they don't know what's going to happen next, especially even around risk on assets. Now, what ended up happening was, we started to print massive amounts of US dollars. The M2 went crazy. Liquidity started to improve drastically. We also started to see the stock market go crazy as well. And once that started to pick up, all of a sudden, money started to flow right back into crypto, right back into stocks. Things started to go parabolic. You had GameStop going insane as well. And even now, right, as we really look at the Bitcoin chart, if we go back to 2022 to where we are at now, I mean, Bitcoin has gone crazy, but we are not yet over that all-time high yet. We had a nice little peak above it, but we're not over it yet. And even as you guys do see back here in 2020, once we start to peak over that and we officially broke over it on the monthly, we went parabolic. And we are expecting that yet again. But what's going to be the indicator? What's going to be the catalyst that really kind of prints those massive candles? Well, over here we have, this is actually a very interesting take, and this is from me. I said, I remember when the banks started collapsing back in 2023, and this was the same consensus. Ultimately, when banks start failing, where do you park your money? Money market funds have been soaring with over 5 trillion parked in them, but the rate of return is eaten alive by inflation. The only clear option for retail, especially when mainstream media is also pushing the narrative, is crypto. Banks failing are a massive catalyst to send crypto even higher and lay out the red carpet for retail to flock in. The path forward is very clear. Pay attention to what's happening. And I was quoting this post by Rocketeer Crypto Manny. We have Bitcoin catalyst for expansion. Last year, 3 banks with liquidity issues marked the bottom and started the trend up. Now 63 banks will mark the start to the blow off. Now, as we think about this, what is the repercussions? Because I do believe that risk on assets will go crazy. They 100%, in my opinion, will. And as we look at that, okay, the reason why we will go crazy is because, one, people don't want to park their money in the banks. Banks are uncertain right now. You have 63 banks that are at risk. There was a report around 300, right? Inflation as well. Got to remember, inflation is eating up dollars in bank accounts. So there's another major problem. Money is already flowing out of the banks. And it really started back in 2022 as well, which is why I do believe that that's why we saw this report from the Fed in terms of like liquidity around banks may be tighter than you thought. We started to see money flowing out of the banks because of how high inflation started to become, right? Back in 2020, although, yeah, we had macro inflation, but it wasn't as bad. Like, we're talking about night and day differences from now versus 2020. The reason why I bring this up is because during this time, the pandemic was the thing that really kind of brought a lot of attention to crypto. People were at home. They were looking at ways to make money. Crypto was a big thing. It was a big narrative. They started parking their money in crypto. Now you have people wanting to park their money every which way because at the end of the day, they don't want their money to be eaten alive. They want their money to grow. What's going to keep pace with inflation? Well, crypto could very well be that thing. They're going to look at ways to park their money, and crypto is going to be that big area for them because we've already known about how Bitcoin is this, Bitcoin is that. It's trusted now essentially to most people. So they're going to look at Bitcoin at a time exactly where banks are now looking as though they are on the brink of failure. They're insolvent. This is one of the biggest catalysts. And we've talked about it back in 2023 as well. It's going to be the fuel that sends this market even higher. And I do think that as mainstream media starts to really kind of put a spotlight on this, combined with the GameStop, ignition, because we start to see the GameStop narrative ignite massively, that's all mainstream media focus. That's going to bring the focus back to crypto at the end of the day as well, because we know that crypto will have that major spike up, just like it has every single time over once mainstream media starts talking about it. The Bitcoin ETFs, the Bitcoin, having that stuff definitely brought back focus. But what's going to be the next big catalyst? Is it going to be banks collapsing? Is it going to be mainstream media focusing on this? Regardless of what it is, there's going to be a catalyst that pushes us even higher. In my opinion, I do think that the banks being unsafe, I think that people not knowing where to park their money, I think that that's probably one of the biggest things. And also, we do need to understand what the repercussions of this will be. Because yes, in the short term, risk on assets will go crazy. But what happens next? What happens after elections? Well, the system breaks. And I do think that we are headed towards a major collapse. I also think that we might see deflation happen, actually. And that's when risk on assets and pretty much everything get wiped out completely. And we need to prepare for that. Now, I always say, take profits, make sure that we are profiting, but keep a percentage on the sidelines just in case anything. We don't know what's going to happen next. Make sure that you have that, that bag on the sidelines just in case. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.